My name is Adwoa, and I am 49 years old. I spent 16 years as a licensed insurance claims adjuster, then 4 years as a claims litigation specialist, the person who reviews denials, reads the fine print, and determines whether a claim was correctly handled or whether the company made a decision it cannot defend. I know what a contestability clause is. I know what a material misrepresentation is and what standard it must meet to void a policy. I know what the 2-year contestability window means and what an insurer is and is not permitted to investigate once that window has closed. I know what bad faith insurance practices look like and what remedies exist when an insurer denies a valid claim without a defensible basis. I knew all of this. When my husband Peter died of a heart attack at 51, he had held a life insurance policy for 4 years, well past the 2-year contestability window. The policy benefit was $500,000. I filed the claim properly, submitted the death certificate, completed every form, and waited. The insurer denied the claim. Their stated reason: material misrepresentation on the original application. They alleged that Peter had failed to disclose a pre-existing cardiac condition when he applied 4 years ago. I was a widow with 2 teenagers, and I had just been told that the $500,000 policy my husband had paid premiums on for 4 years was void. I was also a person who had spent 16 years as a claims adjuster and 4 years in claims litigation, and I knew, with a specific certainty of professional knowledge, that the denial they had sent me was not defensible. Welcome to Calm Drama Stories. My name is Adwoa, and this is the channel where what you built professionally becomes the instrument of your own protection when the institution counts on you not knowing what you know.
Subscribe.
Leave your city below. This story starts with a denial letter and ends with full payment of the policy benefit, a bad faith finding, and a penalty payment the insurer did not want to make. And between those 2 points is a 2-year contestability window, a state insurance regulation, and 20 years of knowing exactly how these decisions are made and exactly when they are wrong. Let me tell you about Peter and about the policy. Peter Mensabediako was a secondary school teacher, patient, steady, the kind of person who thought carefully before he acted and who had, for years before his death, sat down and decided that his family needed life insurance and researched and applied for a policy and paid the premiums every month without exception. When he applied, he completed a health questionnaire. The questionnaire asked about pre-existing conditions. Peter answered it honestly. He had disclosed that he had been treated for high blood pressure and that he had elevated cholesterol, both managed by medication. He had not disclosed a cardiac condition because, at the time of application, he had not been diagnosed with one. What the insurer found when they reviewed his medical records after his death was a physician's note from 18 months before he applied for the policy, a note that said, in the clinical shorthand that physician notes use, that Peter had reported occasional chest tightness during exercise and that the physician had recommended a cardiology referral. The referral had not been followed up. The insurer characterized this as an undisclosed pre-existing cardiac condition. I read the denial letter 3 times. Then I called my former supervisor at the claims litigation firm. My former supervisor was a woman named Eleanor who had been reading insurance denials for 30 years and who, when I described the situation, asked 2 questions before she said anything else. She said, "How long had he held the policy?" I said, "For years, 2 months." She said, "What was the contestability period in the policy?" I said, 2 years.
Standard.
She said, "Adwoa, you know what that means." I knew exactly what it meant. The contestability clause in a life insurance policy allows the insurer to investigate and deny a claim based on misrepresentation on the application, but only within the first 2 years of the policy. After the contestability window closes, the insurer generally cannot void the policy on grounds of misrepresentation, even if they discover an error or omission in the application. Peter had held the policy for 4 years. The contestability window had closed 2 years ago. This did not mean the denial was automatically wrong. There are narrow exceptions. Certain jurisdictions allow post-contestability denial if the misrepresentation was intentional fraud. Some policies have specific language extending contestability for certain conditions. I needed to read the policy language carefully. I pulled out Peter's policy from the household files, the full document, not just the summary, because in claims litigation you read the full document, and I went through it section by section. The contestability clause in Peter's policy was standard. The policy is incontestable after it has been enforced during the lifetime of the insured for 2 years from the date of issue. The only exception carved out was for non-payment of premiums. There was no fraud exception. There was no cardiac-specific exception. The policy was incontestable after 2 years for any reason other than non-payment, and Peter had never missed a premium. The insurer had denied a claim on a 4-year-old incontestable policy on the basis of an alleged misrepresentation. Under the plain language of the policy and the governing insurance law, that denial was not legally supportable. I also looked at the alleged misrepresentation itself. The physician's note the insurer had found was not a diagnosis. It was a note recording a reported symptom and a recommendation that was not acted on. The insurance application had asked, "Have you been diagnosed with a heart condition?" Peter had not been diagnosed with a heart condition at that time. A physician noting a reported symptom and recommending a referral is not a diagnosis. Even within the contestability window, the misrepresentation standard requires that the undisclosed information was material, that the insurer would have made a different underwriting decision if they had known. The underwriting standard for the policy class Peter had purchased did not automatically exclude applicants with a history of reported cardiac symptoms without a diagnosis. The insurer's own underwriting guidelines, which I requested and received as part of the claim review process, confirmed this. The denial was wrong on 2 independent grounds. The policy was incontestable, and the alleged misrepresentation did not meet the materiality standard even if contestability applied. I drafted a formal appeal letter. The appeal was 12 pages. It cited the policy's contestability clause verbatim. It cited the applicable state insurance code provision governing incontestability. It cited the insurer's own underwriting guidelines. It cited the specific standard for material misrepresentation under the state's insurance regulations and explained why the physician's note did not meet that standard. I also included one additional paragraph that I had written in the language of someone who has spent 4 years in claims litigation and knows exactly what it signals. I am aware that denial of a valid claim on an incontestable policy without a legally supportable basis constitutes bad faith insurance practice under our state's insurance code, and that remedies for bad faith include the original benefit, consequential damages, and attorney fees. I am providing this appeal as an opportunity for the company to correct this decision before I pursue those remedies. I sent the appeal by certified mail. I also filed a complaint with the state insurance commissioner the same day, attaching a copy of the appeal and the denial letter. The insurer's response came in 19 days. They reversed the denial. Full policy benefit approved, $500,000. Their letter said the denial had been issued in error following an internal review process that had not correctly applied the policy's incontestability provision. They apologized for the delay in processing. They did not use the phrase bad faith. That is standard, they never do. The state insurance commissioner's investigation, which proceeded independently, found that the insurer had issued at least 11 similar denials on incontestable policies in the prior 3 years, in which the denial letters referenced pre-existing conditions without addressing the incontestability provision. The commissioner assessed a penalty and required the insurer to review all denied claims in that period and reprocess any that had been denied on incontestability grounds. I do not know how many of those 11 families received their benefits. I know that the complaint I filed created the record that made the investigation possible. What I want you to know, if you have a life insurance policy, or if you are a beneficiary who has received a denial, is this. Read the contestability clause in every life insurance policy your family holds. It is in the policy document, usually in the first 10 pages, and it specifies how long the insurer has to contest the policy based on application errors. Most standard term and whole life policies have a 2-year contestability window. After that window closes, the insurer's ability to deny for misrepresentation is extremely limited. If you receive a denial on a policy that is more than 2 years old, the first question to ask is, does this denial reference the contestability clause, and does the policy language support it? If the denial is based on misrepresentation and the policy is incontestable, the denial may not be supportable. If you receive any life insurance denial, you have the right to appeal. You have the right to request the insurer's claim file, including the documentation they relied on in making their decision. You have the right to file a complaint with your state insurance commissioner at no cost. One action. Today, find your life insurance policy and read the contestability clause. Write down when the contestability window closes on a sticky note and put it in the file. When that date passes, you have one less thing to worry about. Peter paid premiums for 4 years. He kept his end of the contract. The insurer tried to avoid keeping theirs and counted on me not knowing what I knew. I knew. The benefit is paid. The children are provided for. Know your policy. Know the window. Know your rights. That is everything.